Welcome back to Your Property Empire. Now, joining me tonight on the show is Tom Panos, Head of Real Estate Advertising at News Corp, and we've just been joined by Charles Tarbey, Chairman and owner of Century 21 Australasia. Now, I mentioned the Property Buyer Expo just before the break, and a lot of the audience were also asking questions around what's happening in the market around Australia and how do you know when the right time is to buy. So I thought it'd be a great topic for our viewer dilemma. Now, Sydney's growth is predicted to slow down, which is turning many people off, but the growth is still potentially 4 to 9%, which means that property will still be more expensive tomorrow than it is today. So should you be buying, selling or holding? Charles, what are your thoughts?
Well, I think it definitely depends where you are in the marketplace right now. Some of the marketplaces that are going backwards, good time to make offers. I think the marketplace we're in right now where it's not actually completely slow. In some areas it's still moving along very nicely. I think that when it starts to slow down, it's a great time to start thinking about buying and selling because you're not caught up in the rush. A lot of people sold their properties and waited just a short few months and then found themselves paying way more for the next level property they wanted to go into. That climate is slowly dissipating, which is a great thing.
Because I think we talked about it before, when Louis Christopher from SQM Research came out with his material predictions for the next year, the big headlines were Sydney slowdown, the worst since 2012, because it's dropped from 20 to 10. But 10 is still positive. Yes, it means $1 million is going to be 1.1 next year.
The increase we were having was way too high, and we all know around this table it should have slowed down well before Christmas. And when the interest rates were dropped again, it caused a whole bunch of people to come rushing back into the market. What we had happen with the interest rates, which really wasn't targeted at real estate, obviously, it was targeted at other parts of the economy, has really damaged the ability in terms of pricing for people to get into the market.
So, Tom, we'll look at the downward markets like the Perth and Darwins later on, but say a positive market, say like a Sydney or Melbourne, where it's slowing down, but there's still going to be growth.
Yeah.
What do you say to buyers? Should they still be buying or should they be waiting for the market to collapse?
Well, putting the auctioneer's hat on, all I can say to you is, at the moment, there's more choice and less heated bidding. So if you're a buyer, you would be happier now than what you were 2 months ago. But psychology and the way humans work is that when things cool, you also cool off. When things are hot, the time that you shouldn't buy because everyone's buying and no one's selling, people go off and they pay 10, 20% more. So, ironically, there are people walking away from properties that they would have paid $50,000, $100,000 2 months ago. I think the view of not trying to buy at the bottom, it's too hard to work out the bottom because by the time it's bottom, the only way you know it's bottom is when the market's gone up because you can look back and say that was the bottom.
Yeah.
But by then it's too late. So I think that...
Well, Tom, we've all bought, I'm sure we've all bought at the top of the market. I certainly have. And you just wait. If the property's right and you get your right return that covers your mortgage, you just wait and it comes around again. You know, so
what about in a downturn? Say Perth and Darwin have been dropping and the predictions are they're going to carry on dropping. Do people get in now or while it's still going down, or do they suddenly jump in thinking, well, at some point it's going to go up?
Well, I think Perth is a great market right now to go and make offers on, whereas in some of the other parts of Australia you'd be too scared to make an offer because you think you're going to get thrown out, and that's what was happening. So if you're looking to get a property that might have been valued at a certain figure 6 months ago, well, it's going to be valued lower. So somewhere in there you're going to get a good opportunity, and I think that those are the markets I'd probably gravitate to right now, the markets that are falling rather than the ones that are still increasing.
Now, Tom, what about people that are upgrading a home? Is that a good time to sell now and then buy the other one, or should you be maybe buying the other one and then selling yours later on?
Well, Saturday was a classic example. Selling a property in Russell Lee, which didn't get sold because the owners wanted 2.4. I think it stopped at 2,250,000.
Right.
And the owner said, no, I really want to get a little bit more because a few months ago we would have got more.
Yeah, the house up the street sold.
The issue that they forget is this: the house that they're about to buy, they're going to end up buying for $300,000 or $400,000 cheaper because that owner won't get their money. So in reality, when you're buying and selling, don't just look at Chapter 1. Chapter 1 says what I'm going to get. Look at Chapter 2 as well, which is this is what I'm going to sell, this is what I'm going to buy, my changeover figure is in fact better. So a lot of people are better off upgrading in this market
Absolutely
than what they were 3 months ago.
Oh gosh, you couldn't upgrade because you couldn't find anything to buy, and then you sell your property and you get a record price, and next weekend you go to an auction and the property you wanted to buy has gone up a couple of $100,000 more than you expected. Absolutely.
Exactly. So as I always say, don't concentrate on what things cost you, see what profit you're making, and as Tom says, look at the changeover cost. Now, for more information on buying and selling property, you can always download a copy of my book. Just go to yourempire.com.au, and if you'd like our opinion on your strategy or situation, send some details to chris@yourempire.com.au. Now, Charles, let's have a look at the numbers and see what's happening on the clearance rates.
They are going where people have been talking, finally. I mean, it was 3 months ago they were talking that it was shocking, but it's actually not too bad. I like this sort of market. 63.3% was the national clearance rate. This time last year was 68.1. Yes, there's a few percentage difference, but I can assure you that any agent that's selling right now, especially in some of the areas around the country, 63.3% of all of the listings they've got, they'll be doing very, very well, and it'll be a lot steadier market. Now, the interesting one was Sydney. It came in at 63.5, which is the lowest it's been for a long time, but not as low as it has been, in the last couple of years. There have been times when it's lower than that. Melbourne came in at 65.4%, and Brisbane at 58.2. So congratulations, Brisbane. But our award this week goes to Canberra. They came in at 68.7. So for the first week since I've been doing this show for 3 years with you now, Canberra has won the clearance rates for auctions in this last week. So there you go.
So
68.6. Oh, it must have. Something's happened.
Now, again, sometimes we talk about this, is just to be clear for a lot of people, they might be saying, right, the clearance rates have come down, but for some properties, the clearance rates will still be 100%. So if you get some maybe medium-priced properties that there's massive demand for, you won't necessarily get a bargain.
Well, yeah.
And so it could be the ones that haven't got parking or in massive blocks or something wrong with them that suddenly won't sell in a bad market.
Oh, the tougher ones are going to be hard to sell now, and the real estate agents, Tom and I had a chat with each other for about an hour the other day, and we talked about this kind of marketplace, and the agents are back in real estate. Many of them are back in real estate. Some of them that have been in the industry for the last 2 or 3 years have never been in real estate. They've been in a boom. We're back in real estate, and I love it.
So this is going to be great for Tom's online course of teaching agents how to sell property.
Oh my God, he's going to go through a boom.
You're going to make $1 million this year, Tom.
Yeah. Well, actually, I never thought about that, but
he made $1 million last year. He needs to make a bit more this year.
I'm excited about that.
Okay, let's jump to homes advertised for sale.
Well, here's what it is. They're up 3.8% over this time last week. Now, that's massive for Australia. New Zealand was down 4.9%. So it's really interesting how we are in different places of the cycle, and it's just 2 hours across the ditch from Sydney to Auckland. That means to me that a lot of the properties coming on the market is coming on at prices well beyond what it should be. So you've got vendors now with much higher expectations. And the agents that are taking on those properties and not educating the seller on what might happen are going to end up with a lot of very, very unhappy sellers on their books if they're not educating them at time of taking the property for sale.
So basically what you're saying is the vendor's thinking, well, my neighbour got $1 million for it, the market's taking a turn, I need to list my property quickly if I'm still going to get that $1 million.
And they're not going to put it on for less than $1 million, it's going to go on for more than $1 million, and this is what's been happening, and now it's starting to catch up with the marketplace.
So again, is people have got to read into these stats. They can't just look at a stat and say, right, okay, there's more properties on, clearance rates down. They've got to read into it.
Most of the stats now are real time, which in the past they were historical, and by the time you made a decision what you thought was going to happen had already happened, and that was a problem. So.
Yeah. Let's move on to rent price movement.
Yeah, not too bad actually. Sydney was plus 0.43% over this time last week, and Brisbane, I like it was a plus 0.22%, but Melbourne was a minus 0.21%. So the market movements are still all over the place across the country, but the most important thing is it was up across the country 0.24% and only down since the start of the year by 0.96%. So looking at the chart, you'll notice the rent amount is starting to increase.
Wonderful. And finally, the vacancy rates.
2.17 for Sydney, 3.62 for Melbourne, 6.21 for Perth, average of 4% for those three capital cities, Chris.
Wonderful. Thanks very much. Charles Tarbey, Century 21, Tom Panos.
Thank you, Chris.
The Dream Team. Good to see you guys both in the studio.
Thank you.
Thanks for joining us as well at home. We'll be back next week. Until then, I'm Chris Gray. Good night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.